Now, if we have much higher gold prices, and I think we both agree that over the longer term, gold prices are going to be much higher, and that's something that could start in relatively short fashion. We've had more than a few assaults on that resistance area for gold in like the 1350, 1360 realm. And once we get through that area, we should have a bolt upward in the gold price. And once the gold price gets over $1,400, many of the world's most accurate, successful, highly regarded technicians have looked at that and said and agree that once gold gets over $1,400, it's clear sailing to record high levels. There's no technical resistance past $1,400. So we're looking at what could be a significant rise in the gold price at any time on the basis of either the longer term or the short term factors that we've talked about. So with that in mind, how should investors position themselves to leverage those moves in gold?
Well, I'll tell you what I've been doing myself in the money I manage with Doug Casey. And, it's a double-sided coin, though. If gold gets to 1,500, then 2,000, you're going to see a lot of Me Too companies pop up and a lot of pretenders. And more importantly, the assets that are able to come into production at $1,600, $1,700 gold, the problem is a lot of these resources are in very high politically, I call them AK-47 nations, places you don't want to take your children on a vacation. And, you have to think of your money in the way of in the same asset. So you look at certain areas of Africa, you look at, Russia, for example. There's many deposits there, but you're going to lose money because the government will change the rules on you. So you have to be aware of your political risk. But fundamentally, Pareto's law, every generation and every cycle, stick with the best people who know what they're doing, are contrarian, so they built up their asset base in the bear market when there was no one else there. So when they bought assets cheaply, they have skin in the game. You want to invest alongside the management team, not at a way higher cost base. That's another factor that, our markets don't talk too much. So you want the president of the company to make sure that the company you're investing in is his largest investment. So if there's something that goes wrong, his whole net worth is at risk. Trust me, when that happens, the focus factor of these management, the last thing you want to be involved is, a salaried management who has no skin in the game. Then you want to go after world-class assets. And generally speaking, in the resource sector, it takes many decades to develop a resource. It's very rare that you take a grassroots exploration asset from a showing to a drill hole to production within 10 years. Maybe 1 out of 1,000 eventual mines becomes that. In the last cycle, there was one company that took a discovery to production in less than 10 years. So you want to basically advance your investment from OPM, other people's money. So that's kind of the quick Katusa keys that I call it to how to get, access to an investment that, for example, one that is our largest investment for gold leverage is one called Gold Mining run by Amir. And the factor is he's got 9.5 million ounces of gold measured and indicated. And you throw in the inferred, you're at over 23 million ounces. You got also on top of that over 2 billion pounds of copper. And all of these assets are in areas that have infrastructure, that is pro-mining, that you have rule of law. And interestingly enough, just in 2011, the combined market cap of all the companies that had these assets was well over $1 billion. And the NAV was well over $1 billion on these assets. But again, here's a guy that owns 10% of his company. He was able to pick up these assets in a bear market. So he literally bought these things. And yet today, everyone wants to have that big score, but you have to be in the stock before the herd comes. Right now, on a measured and indicated basis, he's trading, I think, about $13, $14 an ounce. You throw in the inferred, it's something like $6, $7 an ounce. We're talking about absolute, buying assets a nickel and dollar, but you got to be a contrarian and you got to be willing to be doing what I call the lonely trade before the masses come. They will come because of everything you said was true when it comes to the gold market. And the reality is maybe there's over 3,000 gold companies in the world looking to produce gold. There's maybe a handful that fit the criteria of what we talked about with, the Catoosa Keys, the management team, the right assets, something that a major will want to farm in. And it's not just me who's saying that. You got major companies like IAMGOLD that are investors in this. You got guys who are world famous speculators like Doug Casey and Rick Rule that are endorsing Amir in this company. Brazil Invest, one of their major assets are in Brazil. The largest merchant bank, run by the Garnero family, is an investor at 10% of the company. So you got to fit the criteria, and then you got to fight the hardest thing in the market, which is yourself and your patience.
Right.
You have to be patient to be a correct speculator.
And what you're saying, Marin, just mirrors and jives with everything I've been telling my readers. The biggest movers, and really the earliest movers and the biggest movers on any kind of a rebound in gold are the companies that have large, world-class identified resources. They offer the most leverage. They respond more quickly to the rise in the gold price. Later on in the cycle, much later on in the cycle, then you get people looking further down the food chain, and investors will look at the exploration stocks, et cetera. But the big, quick movers right off the bat are the companies with the big gold assets that are already identified, already have proven resources and sometimes economics on them. And that's where gold mining really fits the bill. And in fact, we're talking about, the investors will come once the gold price really starts moving. But with gold mining, we have a demonstrated, a proven ability to attract investors. When you look at the history of this company, it was the stock trading for about $1.20 Canadian right now. It was nearly $3 in late 2016 when the gold price was even lower than it is today. So we don't have to have the gold price up $200-300 from where it is today before this company would nearly triple in price. All we need is a change in sentiment.
And I'd add that, the company today is much stronger and deeper in value than it was when it was $3. And, I'm not looking for a triple in this stock. The reason, I've been a holder in this company for 8 years, and I believe I'm one of the larger shareholders of the company alongside management, the same price as management. And ironically, we've bought stock much higher than it's trading at today, but this is a stock that will multiples. Like this will be, as Doug Casey says, this will be, the company will have 20 million ounces of gold, and it'll be a $20 per share price. And we think that that'll happen by, 2020 to 2025 once we get that positive sentiment in gold. And that's what the key factor here, Brian, is the resource sector has been so beaten down that people have pretty much given up the faith. But yet we've seen what can happen with these speculative markets in Bitcoin or even in the social media stocks like Facebook and Twitter, all these different companies. We haven't seen any of that real market momentum come in gold. And when it does, the gains that the right companies will have will startle people because Amir and the assets of this company will attract the big money. And I'm not just talking about retail money. I'm talking about pension fund money, where historically right now the pension funds and the sovereign wealth funds have their lowest percentage of gold investment that they've had since it's been tracking since the 60s. If they just double that to 0.2% of their assets, you'll see the price of gold go to over $3,000 an ounce, and companies like gold mining won't just triple, they will go up 5 to 10 times their price.
Yes, and if you look at what you said about the 20-some-odd million ounces on a market cap per ounce, and if that's around $6 or $7 an ounce, we know, having seen more than one cycle in this resource market, that at the top of a market, those resources are trading for over $100 an ounce, $100, $150 an ounce.
And Amir won't need to finance for many years. He's got something like $14, $15 million in cash in the bank. He has no debt. That's something also you got to be very careful when you're looking at these junior resource stocks is management teams that don't own stock usually leverage up debt so that they get paid back through debt and all this, nonsense. But the fact is gold mining under Amir's leadership, has a big cash war chest. We're not going to get diluted. And when you look at, the gold per share value since the IPO in 2011 of gold mining versus any of its peer, it's the number one performing stock on a GPS metric, a gold per share metric versus any of its peers. And that's going to continue because, again, I've known Amir for almost 20 years, and this is a guy whose net worth is in this company. His family's, largest holdings are in these companies. So it's got all of the right setups. He's built up this asset, he's got a cash war chest, and once we see that positive gold sentiment, and Brian, that's the key. Will it happen at the end of this month? Will it happen mid-year? Will it happen next year? I don't know. That's the golden question. But it will happen because there's so much money in a macro perspective that is looking at gold. And once it starts coming in and other fund managers see that their competitors are having big wins with gold, you'll see the massive herd and the massive inflow of capital.
And that's a point that I wanted to stress, too. When we look at the ultimate potential in 3, 4, 5 years, or when gold really starts approaching its old-time highs. But you don't need that to see a really significant gain in the stock over the near term because the market since 2016 has been stop and start. It's been a stair-step pattern with higher highs and higher lows. So we know we're in a bull market, but we haven't had those kinds of consistent gains that have gotten investors excited. Once we have a few months of a steady rise in gold, then you're going to see companies like gold mining, and I think gold mining is going to lead the pack. You're going to see companies with big gold resources just explode higher in value. And we've seen that before. We've seen that in 2016 when we had just a few months of a steadily rising gold price. That's what happens, and it's going to happen again.
Well, I'm, long and strong on the stock.
Preaching to the choir, huh?
Yep. I've picked right, I believe, and I'm going to sit tight. And I think in a few years we'll be looking back at this and saying, wow, I wish I bought more of it.
Well, thank you, Marin. Great to talk to you as always. Just for the benefit of our listeners, it's Gold Mining is the company we're talking about. It's on the TSXV, the Toronto Venture Exchange. The symbol is simply GOLD, G-O-L-D. On the OTCQX, the symbol is GLDLF. And you can learn more about the company at goldmining.com. Thanks again, Marin. Really appreciate your time.
Oh, it's a pleasure, Brian. Thanks a lot.
Take care.